Is this the end of ChargePoint holding? The charts are suggesting that, but um, let's just say if you're a believer in the EV space longer term, the chart is going to give you an opportunity to get in lower. Now this is the monthly chart, and price has hit both my targets down at $6 and down at $3 after closing below this monthly downtrend line. Going to the weekly chart, it's just been red for the past several weeks. You did have a pause in price um, to retest that resistance at $6 before price just continued to collapse down. Price closed below the $3 level this past week, dropping and closing at the 249 level. Going to the daily chart, you can see that price has continued to respect these all the moving averages, and this is really a momentum 13 symbol moving average, and so the momentum has been really steep to the downside with no clear sign of a bottom. So before we kind of see where price may pause, let's get into this article. It's called the ChargePoint Dreadful Decline. Is this the end of the charging giant? So EV charging station manufacturer ChargePoint proudly touted its latest product ramp up. Still, ChargePoint stock gets an F rating and will probably continue to lose value. I'm in agreement with that. It's easy to find red flags for ChargePoint. For example, we have discovered reports of ChargePoint insiders selling their shares, so that's not really confidence that price is at least going to pause and probably aided in the stock decline. On the morning of October 19th, ChargePoint announced that it's rolling out NACS connector support for its AC and DC charging solutions. Thus, the company is ramping up production of Tesla-compatible NACS EV chargers. Between that day and the following day, ChargePoint stock declined 8%, dropping from $3.23 to $2.97. As the old saying goes, the market has spoken. And what the market said was, so what? Or perhaps too little, too late. Tesla has had its own charging network for a while now, and major automotive manufacturers have adopted that network. In a high interest rate environment, the market is less forgiving for unprofitable companies. ChargePoint has been unprofitable for a long time. ChargePoint CEO tried to change the market's perception of the company's financial situation. Specifically, the CEO declared ChargePoint was well positioned and well capitalized for the future. But if ChargePoint is so well capitalized, then why did the company feel the need to raise $232 million by issuing and selling stock shares? It's a great point. So what this is telling me is that if ChargePoint is going to coexist in the coming years, they need capital to continue to fund their operations because it's very capital intensive. But in order to do that, they have to go to the financial markets to get that capital, which means, as we saw, issuing sales, which is going to dilute shareholder value. So again, uh, with price just continuing to go down, it's definitely oversold. Um, Maybe price pulls back, we'll say to this area between $4.50 and $5, maybe. But any pullbacks is going to be an opportunity to sell. Um, and so what I'm saying is look for price to continue to move down. We're going to look at that dollar level as a price target in the coming weeks going into the end of the year. Thanks for watching. Subscribe. Please like the video.